you have very less amount of money with you or lots of money. You want to earn huge returns from the money you have, but you don't want to invest your money into traditional instruments like FD, RD, etc. So where do you go? You go to the stock market, but unfortunately you don't have the time or skill to do all the research and analysis and pick the right stock for you. So what is the next best option for you? Now that is when mutual funds come in. Hi, my name is Pratij. I'm Aarti's partner. I'm running a consulting company out of Chennai called Mukhya Consulting Private Limited. We provide end-to-end solutions for our clients with respect to finance, consulting, auditing, accounting, taxation, etc. I've been in this field for the last 17 years, including 3.5 years of CA articleship. Welcome to Aarti's Tax Info. We are coming up with a new series on investing, and this is the first video of that series. Let's get into it. So what are mutual funds? This is the definition given by AMFI, the Association of Mutual Funds of India. But that is too technical for a layman to understand. So let's have it in simple terms. Mutual funds is nothing but a collection of money from public who invest in mutual funds on a monthly basis or on a lump sum basis. All this money is collected by a mutual fund company, and they invest all this money into different shares, bonds, money market instruments, etc. on behalf of their clients. So how does a mutual fund operate? Once the mutual fund company has collects all the money from the public, there are certain qualified professionals called fund managers who have been in this field and who have the experience to do all the analysis, research, and they decide which companies, which bonds, which money market instruments to invest all the money they've got from the public. And for the money that you guys invest, you get allocated a certain number of units based on the NAV or net asset value of that particular fund. And after once the investing is done, you can log into your account anytime and check the performance of the fund. And also, as all the mutual fund companies are governed by SEBI, the performance updates have to be sent to all the investors on a regular basis by the fund managers and by the mutual fund company. So you'll be getting all the information about the performance of the fund, the allocation portfolio, all that. Now, after you decided to invest in a mutual fund, you have to understand what types of mutual funds are there. So basically, there are 4 types of mutual funds. The first is equity fund, the second is debt fund, third is hybrid fund, and the fourth recent one, it's called commodities mutual fund. So equity mutual funds. Equity mutual funds, as the name suggests, the money that the company gets from the public is predominantly invested into stocks of companies. So this is a type of mutual fund which is suitable for people who are looking for high risk and high return. The second type is called debt fund. Debt fund, the money received from the public is predominantly invested into government bonds, corporate bonds, and other money market instruments, which are relatively safer. So this kind of mutual fund is suitable for people looking for lower returns and lower risk. Now the third one, as the name suggests, hybrid fund, is a mix of equity funds and debt funds. So this is for people who are looking for a little bit of risk, little more risk than the debt funds, and a little lesser risk than the equity funds. The returns will also be moderate. So it is for people looking for moderate risk and moderate returns. The fourth one, commodities fund, as I already told you, it's a relatively new one. The money received from the public is invested into commodities like petroleum, oil, gold, etc. So unless you have a fair idea about the commodities market, it's better to stay away from this kind of fund. Now, what are the ways of investing in a mutual fund? There are only 2 ways to invest in a mutual fund. The first one is called SIP, or systematic investment plan. The second is called lump sum. SIP, the beautiful thing about SIP is that you don't need to have a huge capital, a huge amount of money to start investing in a mutual fund through SIP. The minimum amount as mandated by SEBI to be invested through a SIP is 500 rupees per month. There is no upper limit as such, and this can run into thousands or lakhs also. And the tenure of this SIP is based on the requirement of the particular investor. It is dictated by his goals. It can be short term, it can be medium term, it can be long term, like down payment for a house, down payment for a vehicle, or their children's education, children's college fund, children's marriage fund, anything. So this all depends on the requirement of that particular investor. In lump sum, you invest all the amount at once, just like an FD, and just let it be. At a later point in time, when you want to withdraw, you can either do a full withdrawal or a partial withdrawal. This is same for both lump sum as well as SIP. The redemption process is very simple. You can do it at the comfort of your house or office, and the money gets credited to your bank account in a matter of 3 working days. Now that this much is clear for you, how to choose the right mutual fund for you. If you look at the market today, there are hundreds of funds run by a lot of people, and within each fund, there are several subcategories of funds which gives you different types of returns for different types of tenure, different lock-in periods, open-ended schemes, close-ended schemes, a lot of different things like that, which might be confusing for you. So if you have the time and if you're confident enough of your analytical skills, you can do the research on your own, and based on your requirements and based on your goals, you can choose the right fund for you. If you're not confident enough, or if you're a first time investor, it is better to go with a financial planner who can guide you to the right mutual fund based on your requirements and based on your goals. So this is the basic introduction about mutual funds. We'll have a series of videos on this as to how to invest, which funds to pick, what are the different kinds of funds available within the main types of funds, what are the subcategories of funds available. All these will be covered as part of this series in investing. So hope you enjoyed this video. For more videos like this, please subscribe, share and like our channel. Thank you. Bye.